All right, hey now, and welcome to the Real Estate Rundown. I'm Dustin DeHart with Keller Home Loans, and
Nick Lehman with KW Las Vegas. How long did it take you to learn to say that?
yeah, I've said some other home loans that I was associated with for a long time, and Keller more. Yeah, yeah, I'm getting it down.
Got it.
Been 3 weeks in, and yeah, I'm finally learning where I work at.
Fantastic.
So
Transition's okay?
Transition has been amazing. Yes,
Good,
yes.
good,
It's
good.
Boy, it's busy. I tell you, it's been nonstop, running a million miles an hour. So I feel like things are starting to get back to normal. I guess.
Yeah.
It's not quite the normal we're all used to, but it feels like, man, the buyers and just the market in general, right?
For sure.
People aren't, so negative anymore, right?
No,
About,
it's true.
the inevitable housing crash, right? I know we'll talk a little about housing numbers and, rates will have settled down a little bit. They've been, after they spiked up, have been coming back down. So things are looking good. I'm excited to see what happens in the spring and summer months, which is when it's typically the busy part of the season for us,
sure.
right? So,
For sure.
yeah, speaking of the transition, it's been great. Just having so many new products and programs. I talked about that down payment assistance program
Yeah.
last week. We already have 4 people approved out making offers with
Oh,
it.
that's awesome.
So just to be able to, put people into products that we didn't have before and, be an elite conversion has been amazing, and even like our app that we've shared with you,
Yeah.
that we co-branded on there. You get to see everything that's going on with our clients, right? From when they get pre-approved, if they filled out the application or not, right?
It's cool. It's
It
really
is
cool.
pretty cool, right?
Yeah,
Like,
no, it's super cool.
one of our clients, Negative Neil, right?
Yeah, he's
he's been fun, but
he's something, that's for sure.
he is something, not everybody is is a slam dunk easy deal, right? Sometimes we have to work for our money, you know what I mean?
Weird.
It is weird, but yeah. Oh, well, and look at this. Right on cue, look who's calling in.
His
It
ears
never
are
fails.
His ears are burning.
There he is. He
guys.
does say he's our number one fan, but it's because there's only one fan in our show.
100%.
It
Man,
takes. it
he's
starts
looking
with one.
good. You like glowing today. You've been working out. You got a tan. What is facial? What's going on with him, Nick?
I'm wearing a new tie.
New tie.
Good tie.
Yeah,
It brings out your eyes. You look great.
There you go. Well, I thank you for calling in, my friend. We finally got you approved. You've been out there making some offers, right?
Yeah.
Yeah.
Looking at some homes for sure.
Yeah, the pre-approval process, it was a little clunky at first. We had to work through some issues. The first thing was Neil's assets. He doesn't like banks. He doesn't trust them. Right?
I mean, I get it. Considering what's going on right now.
Yeah. I mean, I explained to him that, we do have to have the money in a bank account, and that, if it's under 250 grand, which it was, that he's safe. It's insured,
Sure.
right? The FDIC insures that. So people don't go freak out and take your money out of Wells Fargo tomorrow unless you have well over 250,000 in it. So, but we got that straightened out, right, Neil?
Cash is king. I don't understand why you can't count all the money I make from my side businesses. I do a lot of work out of Guatemala.
Oh, God. Yes, yeah. Well, yeah, we talked about that. Guatemala. I didn't ask him what he does up there, but there are guidelines in place. We got money laundering issues and this and that.
Seasoning,
and use that
taxes,
income.
I'm sure.
Yeah, but we found him a program where we only need 30 days of assets, so we got it cleaned up. He's ready to go. And then I went over all the loan programs with you, Neil, and we figured out the best one for you, right?
Yeah, I don't understand why I can't go VA.
Oh yeah, so that was another thing. Yeah, we took a few days because Neil thought he was eligible for a VA loan. And we tried to order a certificate of eligibility. He said he was in the reserves.
Okay.
But digging into it, he was actually in the Cub Scouts.
I
I appreciate your service in the Cub Scouts, though, Neil.
not
Yeah, I
Great.
got kicked out for eating a brownie.
Eating a brownie. Wow. Thank you, Neil. That
It was a special brownie.
Yeah,
What do you guys
That
think?
makes sense.
special
Yeah,
one? Oh, okay.
yeah.
Marijuana? Is that what you mean? I don't know. What the hell
Well, it's
Neil's
legal
talking
here,
about.
but probably not in the Cub Scouts.
Got
So
kicked out for eating a
doesn't
brownie.
quite get VA eligibility there. Huh?
No, it doesn't, I was in the Cub Scouts too for
Were
like
you?
6 months. Yeah.
That's awesome.
And I still can't tie a knot,
Okay,
right? But we live and learn,
Grow every day.
Made me the man I was for those 6 months, Speaking of making the man you were, so you've been out there making some offers, right? Nick?
Yeah,
You
no.
and
So
Neil?
we
And-
started Mount Charleston. If you
Oh, yeah,
if you
the stabbing
remember,
cabin.
he
I
wanted
remember, yeah.
that we didn't quite find the third story pool on the balcony. Found a couple of properties that checked some of his boxes.
Yeah.
Convinced them to go back to the valley, stay in the city. We did find a place that checked almost all of his boxes, about 8 out of 10 boxes, but he was struggling.
I know you went out to Mount Charleston like 10 times.
I did,
right?
dozen
Yeah.
times, filming, previewing, didn't quite check all the boxes.
Okay.
But we did make an offer, a house not too far away from here, actually, but he struggled making the correct offer.
I still need my studio.
He still needs a studio.
Yeah, the studio. So, I mean, listen,
So we went low ball, right?
we did. We
Yeah.
went low ball, and that's just...
Like low ball, like how much? Like
well, we were priced at $650, and we came in at $350.
350. Oh, yeah, that's
So,
low ball. Okay.
So yeah, and
Hey, you live and learn. You got to try.
we try.
Right?
You dip your toe in, see what
Right.
happens.
Did you even get like
we didn't get a response.
Reading your
No,
response?
not a
No?
rejection. I encouraged a counter. They
Yeah,
just
no,
said we're
they
too
just
far
were-
apart.
Yeah.
So then we actually got into contract on the one I sent you, but
Mm-hmm.
we during due diligence we couldn't figure out the personal property, or I don't even really know what to.
They didn't want to give me their parrot.
Yeah.
Oh, there was a parrot. Oh, and okay.
So the sellers had a pet parrot. He wanted to write it in the contract.
Parrot.
I didn't really know where to put it. Long story short, we couldn't.
Yeah. Have you ever a living animal or have you ever had that in personal property?
I have had the personal property piece is one, it can't go towards the appraisal. So
Right. Yeah.
and
We're not going to
two,
get any more value for that.
no more value,
I
and
don't
you have
understand that.
and you have to ask for it first. So understand we were in contract.
Yeah.
Then during the home inspection, he
That's
wanted
right.
to ask for the parrot
Yeah.
after. So it's hard to negotiate personal property
Yeah.
once you're already kind of in contract. So
Neil told me about the parrot. It was a cool parrot. It cussed and did a bunch of stuff.
it's
And
right
was,
up his alley.
Yeah. It was,
But needless to say, it
it was a
canceled.
negative parrot.
Neil, I do say though, I have some homes that I want to show you. I got a couple Knicks picks, so I'm hoping you have some time later this week and we can get you back out there and looking at some property.
The parrot left a really bad taste in my mouth. Gary Vee kind of tells me to not invest in real estate, so now I'm kind of second guessing this whole thing.
Gary
Vee.
V. Yeah, boy, where do you start with Gary V?
I like his parenting model. He
Yeah,
does
what's
have
that?
Some good, get off your kids or kids get off your parents' payroll. That's one of his.
Okay,
I
yeah.
sent that to my kids. But the real estate stuff. I mean, the reality is in real estate, it's the avenue or path that the most self-made millionaires have. Transpired.
Gary
so.
will tell you to like. Gary, even if you own a home, sell it and live in your yard, right? All those. Don't buy a TV. You got one of these.
Yeah.
It's like. Don't buy the Porsche because you can't buy the jets. Like Gary, if I'm gonna buy the jets, if I'm at $4 billion and that 150 grand I spent on the 911 pushes me out of buying
sure.
the jets, then I'm okay with it. Gary's. I don't know. He's not my cup of tea.
He's special. He's special.
I don't. Does everybody need to be a CEO, Neil? You know what I mean? Like, how many CEOs do we need? Can't some
I'm
people
a CEO.
I
I really value you guys, and I'm your number one fan, and I value your opinions. I just want you to know that. So, after hearing all that, maybe I will stick with it and get a house because Papa wants that cheddar.
Papa wants that shadow. Yes. Well, there you go. So we've accomplished a few things today with Neil.
We have.
Number one, he's not listening to one of his mentors, Gary Vee. So
Fantastic.
he's going to buy
That's
real estate. Don't buy the Porsche, though.
Please
That's
stay
a
off
good
YouTube.
idea. Although,
Don't tell me how to live my life.
yeah, I won't. Yeah, if you do, there are.
Please do it after we close escrow.
They're fun to
Do it
drive.
after.
But. Yeah, look, lowballing offers. I mean, you got a lot of clients like that, right?
Yeah,
They
no,
try. I don't know about 300 grand low.
No, listen, you let everybody go on a little bit of a
Yeah.
journey, and then it's just more educating them on the way. So I think Neil's on the right track. I told him that the next home that he loves, I'll run the numbers afterwards, kind of give him a a range of what we should come in at, and
let's make sure like next house that they don't have any pets in there.
I'm going to do that due diligence. Yeah, I'll call.
So I shouldn't lowball. I thought the market was crashing.
Yeah, well,
you know, inventory has continued to drop again week over. We follow this every week, every day, honestly, and it's continuing to drop. It's still declining, and it's just that's.
And actually, the last 3 months for pending home sales, it's gone up for signed contracts for resales.
Yeah,
you know,
so
we're not going down.
We're not going down. We've said it before. We believe we hit the bottom. And Neil, we're going to crunch numbers for you, the next property that you like, and we're going to do our best to get as close to what fair market value is of the property.
Yeah. So, Neil, you're fully approved. Let's get out there and find you a house, brother. And then, you know, we want to be invited to that first barbecue because I have a feeling that might be fun over.
Oh
maybe
yeah,
Neil's
I'd
house.
love once we can
All
get
the
past this
Guatemalan
step. It's
people
going
he
to be
has.
great to learn about his other businesses.
Yeah, awesome. Well, Mr. Neil, thank you for calling in as usual. Our only caller, by the way.
Yeah.
One of these days we might get another.
Thank you
caller.
for having me.
Yes,
Our
you're
pleasure.
welcome.
That's
Thank
our
you,
pleasure.
sir. We appreciate you. All right, there goes negative Neil. Man, we you know, look. First of all, I'm trying to drink some water here. There's some lipstick on there. It's really throwing me off. But I keep drinking it because I am thirsty, and I'm like, I don't know what I'm going to catch, you know. But
it's fine.
Maybe
Some mono.
I'll not drink that water.
Yeah.
So where were we? What were we talking about, Mr. Neil? Yeah. So lowballing offers, you know, that's always, you know, look, that's always going to happen, right?
For sure.
You typically get that with newer clients that come in from like maybe out of town, or I want to buy a foreclosure. You get those a lot.
You commonly get it with first-time home buyers or somebody that hasn't been in the real estate game for a period of time. It's very common. I just, you know, give them that space. Let them go on their journey of what that is, and you know, after the seller tells them, I kind of let the seller or the listing agent say no, and it's not really coming from me. Like, oh look, we tried. I tried to get a counter. They didn't even respond. Most of the time, I can get a counter when you're $300,000 off. Not really likely to get a counter, but if you can get close enough to just like, hey, just get that counter, then it gives me some legs to go back and say, hey, this is where they're at.
Yep. You know? And look, I'm gonna on the rundown talk about a renovation loan.
Oh, sweet.
You know, so instead of going in really low and maybe you were competing against a cash investor, you know, now we can actually finance in some costs to renovate the house, right? So, you know, especially in this lower inventory environment.
So
that
would be
we'll
super
talk
helpful.
about that in the rundown.
Nice.
How's your week been? I know you've had some interesting things happening.
It's been personally like you know, kid stuff going on, but it's been nice. I had 3 different buyers come out in the last week, so you know, the weather was interesting and nice for 3 or 4 days in a row. So clearly, when the weather gets good, buyers are ready to come out, and we had 3 consecutive days of buyers to show some property to, and we just got that doctor approved. So that's exciting. Once they come back from out of the country, then we're ready to rock and roll with them. So it seems that.
And another product that I didn't have, you know, a lower down payment jumbo with no mortgage insurance, at a really low rate.
So, super solid.
Yeah, it's nice to actually be able to convert deals.
For sure. Yeah, right.
It does help.
No, people are coming out of the woodwork, and it seems to, you know, be churning a little bit. So
it certainly does. Yeah. Yeah, so, you know, and with rates, you know, they went up. You know, we took a little hiatus on the show, right?
Sure.
And, you know, before we left, they were dipping below 6, and then they were in the 7.5% range. Now we've settled in that 6.5, and, you know, we're starting to get lower. This week's been pretty flat, which I'll take instead of going up, you know, and we'll have some big economic news next week, and I will certainly advise on what's happening next week with interest rates. But so far, so good. So, all right, I think it's about time to
Shall we get to the rundown?
Let's
do it. Let's do it. All right, so the real estate rundown is, for those that haven't watched the show before, is a hot potato type, I go, Dustin goes. We bounce back and forth. We'll talk about topics that are relevant in real estate, mortgage, and here, you know, just news information locally here in the Valley. So let's get it started off with Dustin here with DSCR.
Yeah, it's another acronym.
Yeah, I love it.
We can't get out of the acronym game here. So debt service coverage ratio is what that stands for.
I would have not guessed that.
Yeah, and I've said that wrong a few times, so I actually almost did it again. So this is a loan product. It's a non-qualified mortgage product,
Okay.
right? So it's not your Fannie, Freddie, FHA, VA. It allows for buying an investment property,
Okay.
and you don't have to show income. So the income that we're going to use is the net rents that are going to be received, as long as that covers the payment, meaning it's a little more,
Sure.
you're good to go, right? So
Really?
basically, we're just, showing that you got to put at least 20% down,
Okay.
right? The more that you put down, the better the
better.
interest rate
Sure.
is going to be, but that's going to be for our,
Investor, yeah.
or not even investors, but, the business owner that
Sure.
we know does well, but unfortunately has a really good CPA, right?
Yes, yes.
And the bottom line doesn't show that well, right? So but yeah, like the cash and the investors that want to leverage money,
Sure.
or there's a lot of scenarios that could benefit people with. You know what I
Okay.
mean? Couple that with the bank statement products and the 1099 products and stuff like that. So. It's not going to be for everybody. It is going to be a little higher interest rate.
Okay.
But if you could qualify for not going DSCR, then we wouldn't be talking about
That's
the
fair.
higher rate.
Right,
So,
right.
All right. So 1%. Let's hit that. I don't even know
So,
what that means.
well, yeah, I'm glad that you
1%.
asked.
Yeah.
No, we're just the narrative of the rates. So the rates going up, we're going down, and really trying to put that into a math equation. So
Sure.
I like to try to help educate people in that all business is just mathematics.
Yep.
So if you're going to come at the approach of, hey, I want to buy a house, should I buy? What is the difference between rates? And so I try to turn it into a math equation for people. So I got a loan amount over there on the left at $700,000. If we have a mortgage rate of 7%, we're about $33.26 payment. If we drop down to 6.5%, we save $166, and the full impact of what 1% is about $328.76 on $500,000. Why I like to turn this into a math equation is we can still get concessions right now.
Sure.
Should the concessions be thrown at a buy down? Should it be thrown at an interest rate? Pay some money up front. Let me get a lower rate. What does that really do for me? Oh, we think rates are going to go down. And now we can come at it from a place of education and math. Does it really make sense to put the closing costs there? Does it make sense to make this offer? Does it make sense? How much does that really mean for me if I get 6 versus 7?
Right.
And so it removes a lot of emotion. Buyers, this is the single largest purchase they most likely will make in their life. And moving is stressful.
Yeah.
Lots of emotions going on, and we try to, like I said, kind of turn it into math, and then they're able to kind of filter through and process and
100%. And sometimes
offers.
when you explain the numbers, and you got to take into account that $500,000 loan amount,
Right.
or let's say sales price. Well, that was a lot. That was like $575 last year at
course.
this time, right?
Right.
And that's a difference of $400 in your payment, right?
Yeah.
So when you do that with getting these seller concessions and everything else, I'm telling you, it usually works out better buying now versus this time last year.
Oh,
right?
100%.
It's
And just
presenting
being
the
able to process where's it going. So,
Yeah.
well, I'm waiting. Well, I'm just waiting. I'm waiting because interest rates might go down or pricing might go down. Let's lock that in. Prices are not going down.
Sure.
We've already established that. But the interest rates, if they do go down, you have that opportunity to refinance.
Exactly.
Yeah.
Yep.
Vegas sports town.
Yeah. Well, boy, could you imagine 10 years ago I would have
No,
told you what's
just
going on
wild.
with this town with sports? We finally had Final Four, but March Madness.
Sweet 16, Elite 8.
Sweet 16. I think it's 2028. We will have the Final
That's
Four.
right.
And we have a slew of games up until that.
Yeah.
So we've been entrenched into the NCAA tournament. Speaking of which, I've never had a worse bracket in my life, but no one did.
No, yeah.
Yeah, like
It's
every bracket's already busted.
terrible.
Yeah. So, and San Diego State, if they better not win.
Really?
I don't know why. Because
You're like hating on the Mountain West? Like, I think that would be cool.
Yeah, well, I don't think they're not long for the Mountain
Yeah.
West
All
either.
right, all
So
right. I like the under in that game.
We got the
FYI.
Golden Knights, fighting for the top
Yeah.
seed in the West. Maybe another berth in the Stanley Cup.
That would be
right?
just wild.
We've got the draft coming up, right? And then we got some pretty good game next year. The Super Bowl.
Yeah.
The Super Bowl
is in
coming
Vegas.
to town.
If you'd have said that to somebody 10 years ago, like,
yeah, exactly.
no, just wild.
And everything, the Aviators are starting up. Love going to those games.
They're fun.
We may get the farm team, the Oakland
Yeah.
A's, I mean, just, when's F1 start?
November.
Towards November. I mean, that's supposed to blow
gonna be
everything
wild.
away.
Yeah,
right?
and it's not just next year. Like, I think it's a 4-year contract.
Oh, yeah,
They
yeah,
say,
yeah.
we're
No,
gonna have
yeah.
the race consent. It's not just those one.
Oh,
and done.
sure. Yeah.
And then I just did the indoor lacrosse. I don't know if you had a chance to do it.
I haven't. Yeah. I mean, we've got some of these
It
little
was
smaller.
so fun.
Was it?
It
Yeah.
was a wild
it
time.
really?
Yeah, no, it really was. That's
Yeah, I live right by the Dollar Loan Center arena.
nice.
They have
Silver Knights.
Silver Knights
Yeah, that's
and
fun,
the indoor football team.
Yeah.
And it's a great venue. So, man,
Super
that's
fun. We're a
more
sports
than enough
town.
sports.
We're a
Right?
sports town.
UNLV sucks. Let's just face it. They're about dead. I think we can just get rid of UNLV football and maybe basketball as well. So,
Maybe.
All right.
All right. UConn Luxor. So,
UConn Luxor.
I
see
do.
where you're going.
So we had the Sweet 16 Elite Eight.
Yeah.
UConn. An article came out that the amenities and condition of the Luxor,
Right.
between vomit and trash
God knows
and
what
like
other,
whatever was going on at the
yeah.
Luxor. Why near and dear to my heart is I was a valet parker at the Luxor
was gonna
for
say,
11
we
years.
still know
So
somebody that
we
is.
know people there.
Yeah.
Like this place, like wow, it just kind of made me giggle that here, to piggyback off your sports thing, that the UConn men's basketball team, so I didn't even recap, was scheduled to stay at the Luxor. Got there, checked in, and the conditions were so horrific that they had to check out and get moved to a higher level.
Did that ever happen? Okay.
Yeah, I mean, we were known to not be the most cleanliness
Okay, that's good to
property,
know.
but the valet parkers were on point. Best valet parkers
Yes.
in town.
Yes.
But no, I just thought it kind of made me giggle. It was an interesting.
Yeah, and then they had their
article.
bus vandalized.
Yeah,
too.
they were like being sabotaged.
Yeah.
They're still in it.
They're gonna win because of this crap happening in Vegas.
You need adversity.
Put your
like-
money on UConn.
I think so too.
Yeah.
Like you face some adversity, some challenges, you push through. Listen, life doesn't get easier.
Yeah.
We just get better at doing hard.
Yeah, you sound like Gary Vee right now. I'm ready to end the show right now and go drop some F-bombs.
Yeah.
And get motivated.
Listen, it's
start up
true.
a
So
business. Yeah.
that is why UConn got good at doing hard, and I think they're going to win.
Yeah, no, so do I. It was a hell of a tournament so far. It's
been wild.
We got a 12 seed, a 9 seed, a 5 seed.
Two
God knows
like a
what.
5-4 and a
Yeah.
9-5 or something. Yeah, sounds
Not-
like a phone
not
number.
1, 2, 3, or 4. I don't
No.
think that's ever happened.
No.
So, all right.
No. Renovation loans.
Yes. So they've been around forever, right?
Okay.
And most lenders run away from them like the plague because they're,
Just
they're
a
pain in the
pain,
ass, right?
headache.
I did some 203K, which is an FHA
done it
product
once.
in my days.
rough.
In fact, the company I used to work with, they said, loan officers, you can't do 203K
Yeah,
loans
they
on your
just
own.
botch
It literally has to go through because they were so
Like a contractor, right, or an intermediary or
yeah,
something.
and there's so much to it, and
Yeah.
it's just one little T not crossed or I dotted,
Yeah.
it blows it all up. So I was happy to share that there is one that's now out for conventional.
Okay.
So you can put as little as 5% down, right?
Okay.
And you can get up to 10% of the sales price, right? So $400,000 house would get 40 grand. And it's a pretty streamlined, easy process,
Nice.
right? We just go out, we're not going to beat you up on the contractors and bids. And shoot, if you can just go get Home Depot to do everything, makes it even easier,
Yeah,
right?
right.
But like, Negative Neil, like, he goes, finds that perfect studio and everything else.
yeah.
But he doesn't like the kitchen, or it's outdated, or flooring, or, the roof is falling in.
Sure.
So there's a ton of different things, especially with, the supply it's still really low.
Yeah.
And God, the way we're going may even get lower. Who knows? And with
still
more
going
buyers
down.
coming in, you need to have every advantage, available to you.
For sure.
Like, okay, I do like this house, but I don't have the money to get the things done where I really want it to be, or I'm competing against somebody with cash,
Right.
or God bless, if it's a full-on rehab, we have those as well.
Nice.
You know what I mean? Construction loans
Can
as
you
well.
get money for a pet? Can you help
Parrot, yeah,
do
we
a
could.
parrot or
I
something?
no
Is that-
parrot
no.
cages or anything like that,
Okay,
or koi
no
ponds.
accessories.
So,
Got
all
it.
right, affordability, my friend.
Yeah, so this was really interesting, and it's, I'm kind of a geek on numbers, and this is how you interpret this chart. So at 100, where the line is right there, the dotted line, that value means that a family with median income has exactly enough income to qualify for a mortgage at the median priced home. Okay, what I want people to understand is that this is what the problem is. What has happened? Look where it was below. That's May, June of 2022. What was happening then? Well, it was multiple offers galore. That probably was the peak value for a seller to have sold. If you had sold just before May, good for you. You hit a home run. Okay, we creep back up in August. Some inventory spiked. We got over the affordability line, but we went back down September, October, November because all the sellers jumped on the bandwagon to try to sell now. Oh no, market's going down. I got to sell, and they were trying to get too much money. So that reduced the affordability line. Now, where are we? We're above it, just barely, but that is. What has happened is sellers have not sold, they have come down on price, or they have taken their overpriced homes off the market, which has reduced the availability. So we're sitting at a very affordable, I don't want to say very affordable, but at a place that is better than where we were, which again is more evidence that pricing is not going down.
No.
The inventory is low. The affordability is right at the threshold that it needs to be. And what will happen is the second interest rates go down, that number is going to spike back up.
Because now all of a sudden
it will be more affordable. It'll be more affordable as far as what the family's ability or the buyer's ability is to purchase. So I want to understand, make sure people understand how that's correlated, and that's where we're headed. We're headed to a higher probability of affordability. That's a lot of ability. Wow, tongue twister there. All right. So it's important for people to understand that has been the problem. Why the market did what it did was the affordability piece. And it's hard to buy a home right now because the income's not there.
Because people just get myopic on one thing: interest rates, interest rates, right? And then you even have people that are doing this, in the media. Like, I won't name her name, but she always, when something kind of good happens with the housing market, she spins it so it looks bad. And it doesn't make any sense, right? And it's just, learning and understanding the numbers like affordability. But, the fact that, interest rates are higher now, but home prices are lower. And you can, I think it was 80% of homes in Las Vegas in the last 6 months had some type of seller concessions, right? Which is great. We led the nation, right? And then you couple that 10 grand you got from the seller, right? And the price of the home 60 grand less. Your interest rate's higher, but you're probably making out a lot better. And you do the math with the 10 grand, it's about 7 years. And then when rates do drop, which they will, you lower your rate even more, you're well ahead of the game.
And if that affordability increases, people that are not gun shy or buy now, they'll now have equity. As the affordability, as we get above that 100 threshold, now if you bought yesterday, you're just adding equity because prices will have no other place to go but up.
Las Vegas, everything we were talking about, the sports and all of the things that are happening in this town. I mean, affordability is going to get out of control soon. I mean, we're becoming like a mini California. It may take quite a few more years.
Yeah, it's going to take some time, but I've heard whispers that we're, the next Seattle / San Francisco, where your average Tom and Jane commute. There'll be mega commuters, people that commute more than 90 minutes one way, and you'll have to live in Mesquite to, be a school teacher to own a home out here because we're going to get up to, 550 plus as far as median sale price.
I know it's coming.
So
get out there and buy and sell, right? You need to sell.
Yeah, well, you got to build some.
I used to say, get out there and refinance, but that day's coming in about a year from now. All right, what a great show.
Yeah,
my man, Negative Neil, calling in. God bless him.
Love him.
Can't wait for him to get in contract. That should be a fun loan process with Neil. I'm sure he will call in and give us an update when we are in contract. So, anyways, Nick, how do they get a hold of you, my friend?
Yeah, appreciate it. Best way to get a hold of me, that's my direct line, 702-289-5200. Call, text me anytime. Looking forward to chatting.
There you go.
Dustin, how about you?
Yeah, 702-217-3009. There you go, Keller Home Loans. Yeah, we got the new company and everything. Still producing branch manager. I'm not getting rid of that title.
PBM. No, you
Come
gotta.
on, that's solid. All right.
It sounds important.
All right,
it sounds
brother.
important.
Good to see
All
you.
right, good to see you too.
See you guys next week.